Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greeting everybody, let's take a look at the euro currency again. Well guys, initially a couple of words on the recent events, particularly speaking on the G20 meeting in Australia. Here we have one important moment. You probably know that the Putin has left the summit a bit earlier than it was planned, and here a lot of rumors that there were no compromises has achieved on the Ukraine crisis. It means that in the necessary future we probably should be prepared for a more escalation of the conflict on the Ukraine. And particularly speaking for the forex markets, it will probably mean for the new sanctions from the European Union in the relation to the Russia. And now it's not the subject of how strongly these sanctions will hurt the Russia, because Russia is not the side of the European USD currency pair. But since the sanctions is the will hurt mutually as Russia as the European Union economy, we probably should be ready for worsening of the statistics from the European Union in the recent future. I mean, till the end of the current year and the beginning of the next year, as soon as new sanctions will be launched on the European Union in relation to Russia, and that will mean that euro currency will remain under pressure in the nearest future. In fact, that's the points that we have discussed a couple of weeks ago in our large discussion of the fundamental issues on the European Union currency. You probably could recall it if you will research it a couple of years ago, if I do not miss something. So the forecast that we have made on the geopolitical situation now is coming to life probably, and this really could lead to significant geopolitical tensions and negative moments in the geopolicy in the nearest future. I suspect that the rally on the gold market stands not just occasionally, because the most analysis explains the rally on the gold market by the closing of the shorts, because it seems like the gold just hasn't passed through the support around 1140 area. And that's why investors that have taken the short positions at the breakout for the 1180s has closed them, because market wasn't able to pass through the support. But usually the closing of the shorts is the result of something, but not the reason. And I suspect that the escalation and some tensions around the Ukraine situation between the Russia and the West, it could be some factor that has impacted on the situation on the gold market, because that is the geopolitical tensions that mostly the driving factor for the gold among the inflation. The same probably will be for the euro currency, and it seems that euro really could feel the impact of the escalation conflict on the Ukraine very soon. We'll see what will happen, but currently, guys, I suspect that in the long-term perspective, the pressure on the euro currency will increase, and the downward trend probably will continue, if the situation will not change, of course. But recent events, the particular speaking the summit on the Australia, just confirms that the situation is far from the consensus, and it's really the big problem right now. So on the technical picture, we see that euro has accomplished our expectation very fast. So we said that we do not know whether the market will continue to move higher and whether it will complete this harmonic swing to the upside. But what we do know is that probably market will show the bounce down on Monday, because it stands at the resistance right at the daily bot. That's really has happened. You can see this really significant nice plunge down on the euro currency. And with the current move down, now we have to estimate whether we could count on further upside action, some sort of the ABCD pattern to the upside or something of that sort, or we should be ready for the downward continuation. Well guys, currently situation becomes a bit simpler because market has formed the bearish engulfing pattern. So you can see, although this shadow is very significant, but here you can see that that body of this candle engulfs this small candle, and this is the bearish moment. Now market is standing with a retracement back inside of the body of this pattern. Currently we could base our analysis on this pattern, and this pattern suggests that we could return back to the discussion of the possible upside action only if market will take out of this top. Until this will happen, the downward continuation stands as a more probable development. It's a more probable scenario. That's what about euro currency on the daily chart. On the intraday charts, you'll see that market also has completed our forecast on the 4-hour time frame chart. We said that probably market will complete this butterfly pattern and then turn to the downward action. That has happened. What is more interesting right now is that besides of this butterfly, market also has tested the weekly pivot resistance one and turned down. And now you can see that market also has dropped below the weekly pivot point. That's the bearish sign. That increases the chances on the further downward continuation. We know that until weekly pivot resistance holds retracement up on the bearish trend, the trend stands intact. Only if market will move above the weekly pivot resistance one, we could say that trend has been broken in the short-term perspective and market really could continue to move higher. And what is interesting that this top of the weekly pivot resistance one coincides with the top of the bearish engulfing pattern on the daily chart, right? And here we should watch for a couple of moments. First of all, we should watch for this pattern, this level, that's weekly pivot point, it's 2488 area. And the second moment that we should watch for is 2510 area. So if we'll take a look at the hourly chart, you'll see that from the recent move down, that's by the way our engulfing pattern, right, on the daily chart, it's the 50% level, 2510. It's the 50% levels euro likes very much. That's why our crucial area for the further action stands between weekly pivot 2488, 2510 area. If market will pass through it to the upside, then we will get some chances that maybe market could continue to move higher because it will return right back above the weekly pivot point. It will break this, by the way, also you can see this consolidation previously, it's 12.25.10 area. It will break through the 50% level. That will keep some hopes that maybe market will continue to move slightly higher. If market will fail here and will not able to pass through this area, we probably should be ready for the downward continuation. And this downward continuation will lead us again to the uncompleted pattern ABC top 1618 extension is 2325 area. That will be our next nearest target on the daily chart. So keep an eye on this level. Let's see what will happen. But to be honest, guys, for me, somehow I mostly believe in the possible downward continuation rather than to the upside breakout, because this plunge down was really fast and it was really confirmed by just perfect action from the technical point of view, completing of the reversal pattern right at the weekly pivot resistance, failure here return right back down, the forming of the bearish engulfing that suggests deeper action, because you know that the target of the engulfing, the length of the bars, it means that market will should return right back down to the previous lows. And if this will really happen, hardly market will leave untouched this target and untouched these lows. It's probably it seems right now that the chances on the downward continuation looks more probable than upside reversal and upside continuation.